uncle of mine, he used to be an auto mechanic, closed up his shop, went into real estate investing and so on and so forth. I was like, wow, it became very interesting because I saw him happy for the first time. He was in charge. He was in charge of his life. He was in charge of his decisions.
What's going on, guys? This is Matt Faircloth here, and this is a segment that we pulled off of our DeRosa Insiders community, which is a free community on Facebook. On that community, people ask us questions when we go live on every Friday, noon Eastern. This is a brief segment from that series. Lots and lots of great stuff gets talked about, and a lot of it's exclusive for just the Insiders community. We'll give you guys a little taste of it right now so you guys can learn with us too. We hope you guys can join us on Insiders. So go to Facebook right now, click the link in the bio or the description below to join us on Insiders, and we'll see you there.
He had a lot of opportunity to interview me, right? And now it's kind of my chance. He knows a lot more about me than probably I know about him. So we're going to get to the bottom of Herve Francois. Herve, I want to hear your full hero journey. I want to hear about how you all started out. And, let's take it from the beginning. Tell us where you came from in business and kind of what got you started in real estate.
I'll take it back. It's a story. It's been a journey. It's been a great journey, like all other journeys, man, filled with hills and obstacles, but always finding a way to overcome and make it to the other side. On that, I am so excited to say that the journey continues. I'm still not finished. But listen, everyone's story in regards to how they got exposed to real estate, how they got into real estate is very different. Mine is different as well. Very non-traditional. I do not come from a family of real estate investors or parents or grandparents that owned a bunch of real estate growing up. The only real estate that my parents owned was the house that we lived in Maryland, where I grew up, although I was born in New York City. I think a far reach, not within grasp of my parents to become real estate investors, particularly being the immigrants that they were when they came to the States from Haiti back in the mid-60s. When you are a child of immigrant parents, very religious, and then on top of that, my father being ex-military, education is really, really just like beating over your head, man. And you have to go to the best and try to do the best. You are not going to be faced with a lot of different career choices of what you like to do. It's going to be very, very narrowed what it is. And whether or not you like that career choice or not, Vinny, that's the way it was back in the days. It's like, you are going to be this. Luckily, I was able to break out of that mold a little bit my freshman year in college. I said, enough is enough. My father wanted me to go to medical school. I was in pre-med my freshman year in college, Boston College specifically. Go Eagles. Vinny, you and I are going to talk about that later.
Okay, hockey team.
Okay, now gloves are off. So, like I said, man, I was pre-med freshman year. I took this one class called biochemistry, and I said, okay, enough is enough. I can't do this. I don't want to do this. I have no interest in doing this. So from there, it was, as you know, in college, you maneuver around, you try to find what your interests are, what you like, what you don't like, could have an interest in pursuing a career in, and so on and so forth, right? And also all the while trying to find out who you are, being a young Haitian American in the city of Boston in the mid 80s, early 90s kind of a thing. It was business. It was business that I really started grabbing. It made sense. I liked it. I like making money, and I figured, what other major to go into is business. Shortly after graduating from college, a couple of years after that, grad school, Georgetown, come out, get a job on Wall Street. And again, no background, no family history in any parents, grandparents, aunts and uncles that have ever worked on Wall Street before. Truth be told, I had no idea what the heck it was. When I started grad school, it wasn't until my second year, we started having employers from Merrill Lynch, from Citigroup, from Bank of America come down, interview students. Some buddies that I did graduate from BC with, I reached out to them because I knew one of my buddies, his family was in the business, in the Wall Street business. So I reached out, I said, hey, Mark, you got to help me out here, man. We have all these employers coming down, talking about interviewing for jobs in investment banking departments, in equity research departments, in sales and trading departments, and so on and so forth. What am I getting? And so he broke it down, explained it to me. I like the equity research opportunities, which is basically you are in charge of covering a particular sector, particularly oil and gas, food and beverage, retail, technology, obviously. And you have to become an expert in that particular industry. You're going to be covering the stocks that fall within that industry, writing research reports, and really telling portfolio managers at mutual funds and hedge funds who own these stocks, what is your stock recommendation? Do you recommend buying the stock, selling the stock? What is the research? What's the evidence that you have put behind your stock recommendation? They call it research analysts on Wall Street, right? Some call it stock research analysts, some call it equity research analysts versus a credit research analyst that are people that analyze the debts. Believe it or not, there are analysts out there that make decisions on stocks based on what just the charts are doing, regardless of what's happening with earnings, regardless of what's happening with the bonds, simply on what's going on with the direction of the chart. So I was interested in fundamental equity research, got into it, covering technology stocks, working with a senior analyst, learning my trade, learning my craft before I broke out, became my own senior analyst, covering my own group of stocks. And this was back, man, during the mid 90s. And it was the heydays. We were having a blast. We were, traveling around the globe, not only meeting with the companies that you were covering, but also meeting with the clients that you were pitching these stocks to, because these portfolio managers are around the world, not only here in the United States, also throughout Europe, throughout Asia. So I had clients in Singapore. I had to travel to Singapore to meet with portfolio managers. And it was a heck of a run. Met some incredibly smart people. When I was an equity research analyst on the street, there was really never a discussion about real estate investing. The only time you would hear about it is if the analyst that covered the REITs, he or she would get in up and they would start talking about, hey, we recommend buying this multifamily REIT or this office REIT. Kind of clouded, kind of confusing. I never really immersed myself into it, right? I was covering technology stocks. That was my just small exposure to real estate investing. I never bought any property. I never flipped any, never house hacked or anything else like that. Fast forward, it was an uncle of mine, along with his wife. They started in New York. They were buying some duplexes. They were buying some fourplexes. I was really close to him, always talking to him about how he got involved in real estate. He used to be an auto mechanic, closed up his shop, went into real estate investing and so on and so forth. I was like, wow, this is really interesting. And I think for me, it became very interesting because I saw him happy for the first time. He was in charge. He was in charge of his life. He was in charge of his decisions rather than taking orders from other folks. Before, he had opened up his own auto shop and he was loving it. It was kind of hands off. He was getting older. Him and his wife were thinking about where they're going to be retiring. His kids were out of the house. I was like, this is really beginning to appeal to me. And it was appealing to me at the same time that business on Wall Street was beginning to slow down. We were all being asked to do more with less. Headcount had been reduced. Compensation had been reduced. I started thinking about my transition. Now I'm married with kids. My kids are getting a little bit older, but I'm still traveling like crazy, not spending as much time with them as I'd like to. I didn't see that abating, especially as things were getting tougher and tougher on Wall Street. This boutique firm I was working at, it was always business model, business strategy of the month. They were shifting here and there, not very well capitalized. I'm like, you know what? This is not going to end well. And it didn't, right? And so me and a bunch of folks, laid off. So this was like in 2017. I tried to get back onto the street and I was like, you know what? I don't think I'm going to enjoy it as much as I used to. Let me go ahead and start really looking into real estate. And Benny, I spent the summer of 2017 educating myself. I was going to local RIA meetings. I was watching webinars. I'm reading books. That's the research analyst of me, right?
I like to point that out. It seems like from a very early age, right? You get out of college, you're 24, 25, because it sounds like you went to master's. Kudos to you for doing that right away. And you're from a very young age being looked at for your advice on businesses and the way they're being run. At some point, the business of real estate kind of comes into your purview. And now you're using all those skills to look at that business and that business model as a potential for your future. And it sounds like you got really intentional with all those skills and applying them to something you want to learn more about.
100%. And that's a great thing about real estate. Take a look at your background and some of the other partners, some of the other folks that work here at DeRosa Group, their backgrounds and the skills that they've been able to transfer from where they used to work, whatever W-2 job, Fortune 500 corporate job that they used to have, that they've brought into real estate. I think about some of the skill sets that I have garnered over the years working at Wall Street. Usually when you're in corporate, you pretty much are getting skill sets in finance or in marketing or in management. You rarely get all three unless you deliberately find your way into those different divisions. Folks think Wall Street, they think finance. We are, valuations on spreadsheets, right? As we do pro formas on our deals, we do pro formas on stocks and things like that. People, okay, what's going to be the earnings for this particular stock, Tesla stock in the year 2025, 2026 kind of. This is kind of the same thing that we do here when we underwrite our deals, when we have to think about a 7 to 10 year outlook. Those skills, underwriting and so on and so forth, financials, those are definitely transferable into real estate. We always say real estate's about the numbers, the returns, the numbers need to work. What a lot of people don't know is that there's a lot of marketing. There's a lot of sales involved in Wall Street as well. Where does the marketing come into is like, well, I could come up with a great call on Tesla or Amazon or Google or Facebook, whatever it might be, but I still got to pitch it. It's a crowded field. I'm one of 25, sometimes 30 analysts covering that Google stock or Facebook or Tesla stock. How is my voice going to stand out amongst the other analysts? I got to find a way to be differentiated, right? That's marketing. That's not financing. I can have a $100 price target on a stock. You can have a $100 price target on the same stock. Why are they going to listen to me versus you? They're going to pay either me for my idea or they're going to pay you for your idea, right? I want them obviously to pay me.
Did you get right into the large stuff right away? I know how you got connected with DeRosa Group, but I'd love you to tell us more about that. But how did you what was the first step you took when you said, I'm a high earning corporate person, but I'd love to get more into real estate?
It was a lot of just educating myself, getting exposure. I said, okay, it seems like this is an industry, unlike in finance, unlike in Wall Street, where folks come from all walks of life, right? You know that. We've met folks that are in the construction industry, folks that are in IT, military veterans, folks that are lawyers, medical professions that are all involved in real estate, men, women, different religions, different races, all walks of life, right? So I was like, okay, I can certainly see myself fitting in here. Then when it came to the education, like I said, reading books and so on and so forth, and watching videos, webinars, and so on and so forth, then I'm start going to the local, real estate group meetings right here in New Jersey, in Central New Jersey. Of course, that's where I met Matt and Justin. They belong to the same one. But I did go ahead and I flipped a couple of homes here in New Jersey. I said, let me go ahead and start small. And so, because that's what a lot was I was reading. Oh, people get started in real estate, part of their early journey to go ahead and flip homes. I did it, Vinny, and I did not enjoy it. I did not like it. I'm keeping it real with you guys. I will never flip a home again. I told myself I want to expose myself to more cash flow centric areas of real estate. Obviously, that's not flipping. That's when you start talking about rentals, single family rentals, multifamily rentals. With a buddy of mine that I used to work with on the street, him and I got involved on a 4-unit property in Washington, D.C. We had, if you want to call it, again, rookie mistake, over renovated it so much. Our broker who had sold us the property was like, listen, you guys upgraded this thing so much, you can go ahead and sell these individual units as condos. So we did a condo conversion on this building, which was a nightmare. You got to get legal involved. You got to do condo conversion documents. You've got to get certificates. You got to get, DC housing to sign off on it. Now there's new codes. It was wow. Now, the crazy thing is we did well on that deal and we made some good money on that deal, but it was painstaking. It was painstaking. So I said, all right, check that box, not doing that one again either, kind of a thing. So then it really, really focused on the rentals, right? Meeting Matt, meeting Justin, meeting other people at this RIA meeting, start talking about the benefits, really the positives, getting in the rentals as an investor, as a syndicator. I'm like, okay, this makes sense. Now I'm at a crossroads. I either go into this on a solo basis or I try to team up with some people, knowing that if I go at this on a solo basis, it's going to take a long time and it's going to be real difficult. Call it a blessing in disguise in meeting Matt, meeting Justin at the time that they were ramping their multifamily business, the large part of it. And then they were really looking for someone to help them on the acquisition side because they had been looking for deals just all over the country. And they're like, wait a minute, we need to get more focused. We need to drill down on what markets we really want to invest in. So that's, really how we met. I believed right away that I'd be able to go ahead and add value to DeRosa, again, not only because of my finance background, but also because of my marketing and my sales background.
It sounds like you loved in a sense, learning about different businesses, looking at them closely, asserting their probabilities of success. And then at some point, like a lot of us, we get approached with real estate, or we become aware of real estate and all the benefits that I think a lot of us are aware in here. And you kind of set your sights there. You try to apply some of these same marketable skills to real estate, and you're learning as you're going. And I think that's so great. I think it's great that you share the condo story too, because that's a mistake I've made. I know lots of people have made where you get started in real estate and you learn what you're good and what you're bad at, what you like and what you don't like. When Herve met Matt, I've heard Matt give this story several times. Herve brought Matt and the group a deal. So he has these marketable skills and he came to the table with something. And these are lessons I think that can apply to everybody trying to get into the game. Value he brought really from day zero, with these opportunities and the skills that he built over decades.
When Matt asked me to join DeRosa, immediately I was like, okay, how can I go ahead and add value? He saw it, right? But I wanted to make it actionable. I wanted to let them see that early rather than later. So they knew that they had not made a mistake betting on me, so to speak. And so you're right, Vinny. I mean, I did go ahead and bring them a deal, start analyzing. I mean, I was really learning a lot myself about analyzing real estate deals, because again, I never analyzed the real estate deals all the years that I worked on the street. Didn't know anything about a self-directed IRA. Didn't know that you could invest with a self-directed IRA or all the benefits on the tax savings that you get, depreciation and cost segregation and so on and so forth, 1031 roll-ups. I mean, none of this is taught to you in the schools. None of this is taught to you on the years that you work on the street to buy and sell stock. That's what their infrastructure is set up on. And obviously that's how they make their fees, and they're going to pitch you their mutual funds and everything else like that. But they don't make fees on introducing you to real estate or helping you open up your first self-directed IRA account so you can take portion of those funds to go ahead and invest in real estate. They don't want that out there, right? Because that's going to take fees away from them. So as you probably know, man, as you learn about real estate, you're finding out so much new objectives, new opportunities on your own that you otherwise would not heard about if you did not immerse yourself in real estate. It wasn't until I immersed in it. And listen, you're right. I mean, it's not only what value can I bring to a group, that I'm joining, but I think it helped out. I needed to have the mistakes that I did early on in my real estate career. I needed to make those mistakes. I needed to make those errors, because call it process of elimination right away. What you don't want to do, what you don't have interest, that allows you only in more to zero in, to narrow down what you do have interest. I couldn't be in a happier location, niche within real estate that I'm in right now, and that's on multifamily. I realized that it's not flipping, it's not single family rentals, it's not the condos. For me specifically, it's multifamily.
Of course, stocks do pay dividends, and you can get paid out with your ownership, but it's like you said before, very transactional. A lot of the wealth is generated through these transactions, buying and selling. Whereas real estate, of course, there's huge capital events when you buy and sell, and those are usually great days, but they're also the owning of the asset is the reward financially in a lot of cases. And that's probably more so true in real estate, especially with the tax depreciation and other benefits throughout ownership of some of the other asset classes.
If you guys like these conversations, if you guys want to join me and ask real live questions of me and the DeRosa team for things that we talk about, real live events, make sure you guys go to Facebook right now and join us at DeRosa Insiders. That is DeRosa, DEROSA, and join us for our free Facebook community where I go live Fridays at noon Eastern, me or the DeRosa team, so you guys can join us live. See you then, guys. If you like this video, here's a few more you might like too. Thanks again for watching. Make sure you subscribe and like this video.